Hello traders, you're welcome to this video and I especially welcome you back to the Forex Geek channel. In this video, we are going to be discussing the Trend Sentry Indicator. Alright, the Trend Sentry Indicator. It's actually a trend following indicator and it can be used for both short-term traders and long-term traders. Alright, it tries to simplify your trading analysis for you. Okay, it's a custom indicator, so you'll have to download it from an external site and then add it to your indicators library before you'll be able to make use of it on your chart. All right, so this is how the Trend Sentry Indicator looks like. Okay, it's quite a simple indicator, quite effective to use, but it does not guarantee profits. Okay, so as we can see, the indicator gives you the overall trend in the market, the prevailing trend in the market. All right, for example, you can see here that it wrote short. It shows that the prevailing trend is a short trend, or rather a sell trend. Okay, it shows that there is bearish trend ongoing. All right, so basically for each time frame, the indicator shows the prevailing trend. As you can see on the daily time frame, it showed that the prevailing trend is a sell trend. On the 4-hour time frame, it shows that the prevailing trend is a buy trend. For example, I want to believe that maybe because this breakout happened here, a bullish breakout, perhaps that's the reason why it's now indicating a long trend, because ideally after this bullish breakout happened, we should have the price go up. So on the daily time frame, we can see that the sell is still dominating. The sell is still dominating, so we still have this as a short trend. On the 1 hour, we can see that we are having bullish structure forming already. We're already having bullish structures forming, so it's indicating a long trend on the 1 hour. On the 30 minutes, we still have bullish structure, so it's a long trend. On the 15 minutes, we have to work with the smaller time frame in this case, so we can see that the prevailing trend is short, because if you are trading on the 15 minutes, you're likely a scalper, right? So the prevailing trend, immediate price action is a short move, right? And then for the 5 minutes, the immediate price action is also a sell move. And then for the 1 minute, immediate price action is also a sell move, right? So whether you are a short-term trader or long-term trader, this indicator can be really beneficial for you. Now, in addition to indicating the overall trend direction, you can see that the indicator also uses colored lines rather. It uses colored lines to show dynamic support and resistance levels, and also, add to indicating the direction of the trend. So if you observe carefully, you will see that the blue lines were always serving as dynamic support. All right, the blue lines were always serving as dynamic support. As you can see, our price was bouncing off the blue line. So whenever you want to enter a trade, the first thing you should do is observe the overall direction. That should be the first step. I will recommend that you trade in the direction of the overall trend. So when you have observed the direction of the trend, which is a sell trend in this case, so let us look at the current price activity. Okay, let's look at the current price activity around here, right around here. So the short trend has been identified by the Trend Sentry Indicator. So what you need to do now is look out for sell opportunities. For example, we had the red line forming and price was constantly bouncing off the red line, which was serving as a dynamic resistance. Okay, and then briefly we had a pullback, and then we had the price break below the red line again, and this would have been a good place to enter a sell. Or if you are looking for a good opportunity, you would have still found different opportunities as price kept on bouncing off this dynamic resistance. So either of these spots would have been a good place to enter a sell. All right, but just remember that you should always pay attention to risk management. Okay, so whenever you are entering a sell, look at the possible place where you could set your stop loss. So if you have entered a sell around here, the ideal place to set stop loss is below the previous swing high. So if you enter a sell here, just know that your stop loss ought to be here. If you enter here, your stop loss ought to be here. But if you enter after this pullback, then your stop loss can be here, because this has become the new nearest swing high. All right, so I hope it's clear. So whenever you want to enter a trade, remember that risk management is necessary so that you will not neglect the ideal place to set your stop loss. Okay, so if you notice that the trend has already gone far, just wait for a pullback before you enter a sell, so that you can set your stop loss appropriately above the nearest swing high. So if you have done that, you can enter a sell around here, set stop loss above the nearest swing high, and for your take profit, you can decide to use support levels, or you can actually wait for a blue line to form, right? And have the price bounce above the blue line, bounce over the blue line, as the blue line will be serving as dynamic support level. Okay, so using this indicator is quite straightforward, and it can be used by both beginners and experienced traders. Okay, so like I said, with respect to risk management, make sure that you always calculate your potential risk and potential reward even before you enter the trade. Okay, it is very important, right? And after calculating your potential risk and potential reward, make sure that you use appropriate lot sizing. Okay, do not risk more than 2% of your account balance in a single trade. It is not advisable. All right, and even when you want to go ahead and enter a trade, make sure that you use good risk to reward ratios. For example, I recommend using a risk to reward ratio of 1 to 2 minimum. You can use 1 to 2, 1 to 3, 1 to 4, depending on the activity in the market, right? Do not use unrealistic targets. Do not set unrealistic targets. So long as that target is realistic, you can go ahead with it. Okay? For example, you shouldn't enter a sell here. Let's just mark that point. You shouldn't enter a sell here and be targeting here for your take profit, right? Set realistic targets. We have different resistance zones before that level. You literally have a support, sorry. If you enter a sell here, do not just target here for your take profit when your stop loss is here. That's an unrealistic target, because if you are a position trader, I can understand you setting your stop loss here. But if you are just a swing trader that holds trades for a couple of days or perhaps a few weeks, then this target is quite too distant, right? So if you're setting this as your target, potentially your risks or stop loss level should be somewhere above here, right? If you want to be realistic, okay? So always set realistic targets. If you're setting your stop loss above the nearest swing high, then the nearest support should be your potential profit target. Okay, so make sure that you calculate the potential stop loss, potential profit target, and make sure that the risk to reward ratio is good enough. If it is good enough, you can go ahead and enter the trade. Okay, always trade in the direction of the trend. All right, the Trend Sentry Indicator has already made it easier for you to identify the trend direction, and then the lines also serve as dynamic support and resistance zones. So make use of those very properly to your own advantage. And that is it for this video. I hope you found this video insightful. Kindly like and subscribe for more trading insights, and don't forget to hit the notification bell so that you don't miss out on more trading videos like this. In the meantime, thank you for watching and happy trading. I hope to see you in the next video.